All right, let's dive right in. Today, we're digging into some serious, hard-won wisdom from the stock market. We've got two experts from completely different worlds, a 36-year veteran who literally built his fortune from stocks, and a modern entrepreneur who uses the market to grow his wealth. We're going to break down their most realistic lessons on how to survive and maybe even thrive in the market we're all facing today.
And we're kicking things off with a quote that just completely flips the script. Most people think of the market as a place to, add a little extra to their main income. But Bambang, the legend we're talking about, he sees it totally differently. For him, this wasn't a side hustle, it was the source. And that one idea, right there, is the key to a whole different way of thinking about building wealth.
So let's meet our two guides for today. On one side, you've got Bambang, the legend. Get this, he started out as a regular employee and built 99% of his entire fortune directly from the stock market over 3.5 decades. Then you have Theo Derick, the influencer. He's an entrepreneur, his main cash flow comes from his business, and he uses the market to make that money work even harder for him. Two totally valid paths, but two very, very different mindsets.
And that brings us to the first really important question you have to ask yourself. Because everything, your strategy, how much risk you can take, your whole approach, it all depends on which of these two camps you're in. Are you in the market seeking a fortune, or are you there to enhance one you're already building?
Okay, so what's the real difference here? A wealth seeker, that's on Bang's path, is trying to turn a relatively small amount of money into a life-changing fortune. It's a different game. A wealth enhancer, which is Theo's path, is taking cash from their day job or their business and looking for a place to make it grow faster. And let's be honest, most of us listening are probably enhancers. Admitting that is the first step to creating a strategy that's actually going to work for you.
So, if you're a wealth enhancer, what's the playbook? Well, Theo lays out 3 key things. First, know yourself. What's your real cash flow? What's your environment like? The insights a broker has are going to be different from what a chef knows. Second, build connections. Sometimes the best information comes from a conversation, not a spreadsheet. And third, and this is the big one, only invest cold cash. That's money you could literally watch go up in smoke and still be able to sleep at night.
But, knowing your path is only half the battle, because the map itself has totally changed. The game board has been redrawn. The old strategies that worked for the legends 30 years ago, they just don't hit the same way today. Adapting to this new reality isn't optional, it's essential.
And this table just lays it out so clearly. The old market, the then, was all about fundamentals, profits, revenue, solid companies. The big winners were those blue-chip stocks. Now, today's market is a different beast. It's driven by rumors, by hype, by the speed of information. The huge gains often come from these obscure, risky fifth-liner stocks, and the whole thing is powered by local retail investors like you and me.
And if you need proof of that shift, look no further than this one wild statement. Theo, who started out as a buy-the-book fundamental investor, said his best decision was dumping his safe, reliable blue-chip stocks. Why on earth would he do that? Because while they were just sitting there, another riskier stock shot up 90% in a month. That one move covered all his losses and then some.
So what's the big takeaway here? It's that if you're still clinging to the old safe rules, only buying blue chips based on their annual reports, you might be sitting on the sidelines while the real game is being played somewhere else. Adaptation isn't just a trendy word here. It's a genuine survival mechanism. But look, this new, faster market is also way more dangerous. And nobody, and I mean nobody, understands that better than Bambang. He learned his most crucial lessons on survival the hard way, by having his entire fortune completely wiped out. Twice.
I mean, just look at this roller coaster of a timeline. In the 90s, he made his first fortune riding the IPO wave. He went from renting to owning a house, a Mercedes, the whole 9 yards. Then, 1998, the Asian financial crisis hits, and it all went to zero. Poof, gone. He lost everything. So he spends the next decade slowly, painfully rebuilding it all, only to get wiped out again in the 2008 global crisis. That time, the panic was so bad the market just froze, and he couldn't even sell if he wanted to.
And one of his biggest losses came from a guaranteed tip. It was from a close friend who actually owned the company. So he held on even as the stock was plummeting because his friend kept telling him, "Don't worry, it'll come back." That's where he learned this lesson. A hot tip is beautiful if it pays off, but if it doesn't, it's pure poison. Even info from a trusted source can lead you right off a cliff.
So after being through all that fire, all those trials, Bambang developed one core philosophy.
It's a strategy designed to fight back against the single biggest psychological mistake that sabotages almost every retail investor out there.
And this isn't some rare mistake we're talking about. According to him, a staggering 80% of retail investors fall right into this very same trap, again and again. It is the #1 reason they just can't seem to build real wealth.
So what is it? What is this one single counterintuitive thing that so many of us do that just crushes our returns and leaves so much money on the table?
Okay, here it is. This is the flawed logic. When a stock goes up just a little bit, we see some green and we panic. We sell super quick because we're terrified of losing that small gain. But when a stock goes down a lot, what do? We become religious. We just hold on and pray for a miracle rebound that might never, ever come. We let fear control our wins and we let blind hope control our losses. It's completely backward.
So the solution, the golden rule, is to do the exact opposite. When you've actually got a winner, a stock that's working, you have to find the discipline to let it do its thing. Let it run. The huge gains, the ones that can really change your life, they don't happen overnight. You got to learn to ride the wave, not jump off at the first ripple.
And for the other side of the coin, here is Bambang's most famous piece of advice. Chintila cut loss. It means love the cut loss. Now, I know that sounds crazy. Cutting a loss feels like admitting you were wrong, like failure. But he says you have to see it as a weapon. It's a strategic move. You have to learn to love it because it's an act of liberation.
Why love it? Well, first, it saves what's left of your capital. It stops a small mistake from becoming a portfolio-destroying disaster. But even more importantly, it frees you up. It frees up your money and your mental energy so you can go find the next great opportunity instead of being emotionally chained to a past mistake. It's the ultimate move of discipline over emotion.
And really, that's what it all boils down to. After hearing these lessons forged in fire, you have to ask yourself, what game are you really playing? Are you just hunting for a quick, lucky jackpot, hoping to cash out a small win? Or are you willing to build the discipline to cut your losers without emotion and let your winners ride, which is how real, lasting wealth is actually built in the market? The choice is up to you.